Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Alconin, along with Dennis Dick, and we have Tim Anderson on the line, managing director at TJM Investments. You can find his comments on the Market Daily. It's still in beta, but you should take a look at the AndersonFiles.com if you want to get more of a take on Tim's perspective on the markets. Tim, how you doing on this busy Friday morning?
I'm doing good, and it probably will be busy.
Yeah, just real quickly before we move on, had a little bit of a break in trading. Do you go out and grab a lunch or have a little few cocktails there, or what was it like on the floor when with the outage?
Well, it was really just a lot of people trying to manage whatever orders they had in any type of a system. Most firms on the floor, independent firms who do business for broker dealers or for institutional customers directly, have the flexibility to execute in other markets. So it was just kind of a little bit of not really damage control, but just making sure any orders weren't lost in hyperspace somewhere.
Right.
And then kind of continuing to go along our business until we got feedback as to exactly what the issue was.
I think you
Not
had.
like the
I think
system
you had
crashed.
other. Yeah. No, I think
It's not like the system crashed. It's like they became aware that some problems that had existed pre-opening were coming back a little bit, and they shut it down they shut it down kind of as a precautionary mode to fix it, because before all of a sudden it just kind of became an abrupt close, and things got lost in between connection points. I'm certainly not a connectivity
all right.
expert by any stretch of the imagination, but it wasn't total chaos.
No, you know what, and I think that our guys did a great job covering it here. Actually, got on the local news here, and I think you had other things going on. You had the Greek crisis, you had the Chinese market, and you had the things going on with United Airlines, and the Wall Street Journal went down. So it just there was just a lot of
that really fueled the conspiracy theories pretty good. The fact that the UAL had a halt earlier in the day, and the Wall Street Journal website was down almost at the same time we were.
Okay. All right. Well, let's get to the important stuff. Let's get to the important stuff here, Tim. And the important stuff is this absolutely yo-yo market here. Looked like we were diving into the abyss on the close Friday, even on Thursday, after the futures stocks closed at 4 o'clock. More carnage in the market, closing near the lows. I was almost 100% convinced that we were going to take out that triple bottom here, and then you get a little bit of news, and we're right back up at yesterday's high. I mean,
my question is: Are these the same people? Are these the same people buying the market up 1% that were buying it yesterday up 1%?
No.
I mean, didn't we see this movie yesterday?
It seems like every day, we've seen a couple, and even going back to last week, I know I got bailed out when we finished on the lows of the session, and I had a bunch of longs, and I woke up and they're like, "Oh, please, I want the S&P futures to open up 20." I look and they're up 20, and I'm like, it was not skill, it was not anything. It's just a range-bound market. But the problem is this is such a huge range, 30 handles. So what kind of advice are you giving to your institutional clients here, and with this extreme volatility and an unresolved situation?
Look, it just provides them a lot of opportunity to pick up a few basis points here and there, if you can fade some of these real volatile moves really in either direction. It really gives the the volatility is really to the extent that it doesn't cause extreme dislocations. It's good. It increases the trading volume. It gives traders the opportunity to make money without just trying to scalp for pennies. And and it gives institutional buyers real good indications of where support and resistance is in individual stocks. You know, when you just meander sideways and things are just trading in a very tight range day after day after day, it doesn't really help you identify real support and resistance for individual stocks or sectors. You know, when you have volatility, at least then, the next day, the following day, you have something you can go back and look at and say, well, okay, this is the level. We're going to trade it long against this level, and if it breaks, then, we're going to get out, or we're going to, it gives you levels to trade off of.
Well, now we're moving. I mean, we're still going to talk about Greece. We're still going to talk about China, but we are moving into earnings season, and that's really why, what the markets are supposed to move on. Unofficial start with Alcoa earlier in the week. That was okay. Are there, would you say the expectations, are, pretty high, pretty low? What are you looking for any?
I would think that they're fairly moderate, and we're probably, you're not going to get a lot out of the oil sector, but let's look at just one sector. Let's look at the semiconductor space.
Oh, okay. Just going to ask you about that.
They've been the stocks has just been taken apart. It had a very bad, the candlestick people would call it a bearish engulfing day yesterday. It had been down fairly well below its 200-day moving average, a strong opening, a higher opening, a higher high, and then it closed at the low, a lower low, and a new low. And that red candle just looks really ugly. It's 5% below its 200-day moving average. Micron Technologies really started this all out about a week and a half ago when they had their earnings report, and they mentioned inventory issues in the DRAM space, and the stock was down 15%. Micron was down another 1% plus yesterday. Now, I mean, there's nothing that rattles technology investors more than inventory issues in the chip space or the DRAM space. If you go back to every correction or bear market that technology has had, it always starts with inventory issues or companies getting caught in a product transition. Intel reports next Wednesday after the close.
What do you think?
That is going to be a big deal.
So if they come back and they come out with decent numbers, then you think it will turn the tide? Is it, it's been...
It's possible. Look, if we go down, if the market's weak early next week and the technology semiconductor stocks continue to get beat on, maybe the sentiment will be negative enough to where Intel can just come out with kind of an okay report, and that might start to turn the tide a little bit.
I've been tempted. Actually, I've gotten tarred and feathering this thing a little bit on the way down here, but I might keep trying it. I mean, these are some unprecedented moves here, and maybe if I could get a little bit of a few lows in the same area, a little bit of consolidation, something to lean on. But definitely, very, very.
But then you got to look at Apple Computer also, because that was the buzz yesterday afternoon.
What was the buzz? What?
Well, it was down 2%. The volume was pretty heavy. It was trading 75 million shares. It traded 75 million. The average daily volume is about 45 million. And it was down. It closed 10% below its all-time intraday high. Now, usually I'm not big on intraday price metrics, but the intraday high in Apple at like 134.50 was the morning after their April earnings report.
And Tim, I know that
it reversed and closed at the lows of the day that day at 120. People would say, well, 10%, that means a correction. Well, okay, we'll see. The 200-day moving average is 118 3/4.
I think that has to be my worst trade of the year so far. The day before, I mean, it didn't financially, it's not, but the day before earnings, I just was like, man, this thing has run up into earnings too much. I think they're gonna, chance that they're gonna miss high expectations. So of course, I did like a weekly. The thing was trading 128, 129. I did like a weekly, like 126 put, and
Yep.
boom, it went up and made the high, and then it came back down that day, and I never re-entered the position, and
Uh
that
huh.
was it was like one day. I just could have waited one more day and wait for the pop on the earnings because it did go up to 134 and change. Anything else?
Right.
Anything you're looking for? I mean, you think that maybe it's been a bit too much beat up, that too low expectations. They come out okay, get a rallies or anything on your radar for that?
Well, the financials did not really participate um, in on the rallies that we've had recently. Now those rallies have been coincident with people saying, "Okay, look at this data we got this morning. The Fed's not going to raise rates until 2016." That means the market, the ZERP forever crowd who loves it, and they bid the market, but it also means a much flatter yield curve, which the banks don't really like.
Hmm.
So, if they beat the banks, are, you're going to have J.P. Morgan either Monday morning or Tuesday morning report. I think it's actually Monday morning. Um, they're not real volatile traders, but I mean, I would watch that sector because they haven't really participated. It's hard to imagine that we get a real sustained move higher without them participating a lot. I mean, there's reasons for it, I mean, the government still just has them right in the crosshairs, kind of uses them as their personal ATM machine, it almost feels like. Um, they've become almost highly regulated, low-yielding utilities.
I was just
So
going to
they're not
ask.
that
Yeah.
attractive from that perspective. But if they get beat up a little bit, I think the Fed is going to raise rates before the end of the year. That is going to be a steeper yield curve, and the banks are going to like that.
Yeah, utilities have gotten a nice bounce as of late. I mean, still, I mean, even if the rates even go up, a quarter point, I mean, still, where are you going to get the yield besides, owning some of these utility stocks or some of the defensive stocks, AT&T. Ooh, boy, that went ex-dividend yesterday. That caught it on the chin. So, all right, Tim. Well, good look at the market. Thanks for joining us, and love your commentary. We'll talk to you again soon.
All right, have a great weekend.